Alright, good morning, good day. This is African Crypto Warlord coming to you from a beautiful sunny side Zambia with the guinea fowl and everybody chirping this morning. I hope you guys are doing well. As you can see, over the weekend we pretty much just went sideways. Those were your midterm time frames that were contracting your high term time frames, which had bullish div and stuff like that, and positive drift and negative drift, everybody playing out. So what we're going to come and do for Monday open, we're going to come and observe our distribution cone, which starts on September 4th, and we can see what's played out. Currently we are at one of these ranges over here. This is still on the 7th, as we can see at the bottom here. So this is just to show you the general mean of returns, and from here we'll be able to make some decent observations, seeing as we haven't been able to break out of one of these, the capped range over the weekend. So the general idea is we marked off a monthly mean, which it looks like this morning we've come down to touch. Does it do it to me every time? Yeah. Which we've come to touch, and now we're going to start basing some decent trading levels off of. We're going to wait for the 90-minute to pull through and see if the 90-minute has some follow through to keep us up in this range. Otherwise, the orange line you see here is the line we're more than likely going to go push for until there's new volatility flashes, which currently there aren't, so that's why we're on this distribution cone. Okay, so as you can see, brand new print, any closes below this candle over here, and we will see continuation to the downside. So let's just go have a look at what our 15-minute has to say. 15 minutes seems like he's already mean reverted, so here will be a good idea. I know that this has less steam in it because my mean reversion point is below my cone. So there's mean reverted and the candle's below here. So you're going to look for stuff like the next best move to push you through. So if this little column here is red and these two break through, well then you'll definitely set yourself up. Okay, but whilst we're down here, let's go look at our new VRE daily prints so that we can decide our general direction. Alright, so this was our previous monthly mean over here. Well, this is our current monthly mean over here. This is our new weekly mean. So to expect failure at daily mean, smash into monthly mean, failure into weekly mean, and then for it to figure itself out. This is the midway point. We're about there in the month now, coming in midway point. Another super interesting thing is we have the 21-day, the 14-day, the 7-day, the 5-day, and I think the 3-day is only today, and the 2-day. They've all printed new prints, new data. So with that, we can now see our doji candle that formed on our 21-day. We can go have a look and see what its situation is. So we take off PB cone, we take off that one, we put on your UMP, and we'll throw in a more reverse wave trend. Okay, so my general idea is always has been 2 candle closes above this JMA, and you're going to start to look to go long. Alright, reverse wave trend is sitting at 68 cents, so just call it 69 cents for now. And then we're going to go look at our return oscillators. So return oscillator is mean reverting. Let me pull this up on Poloniex. Duplicate. Cool. Let me pop this onto the 14-day. So we're going to make this one quick. 14-day contraction positively correlated. That's going to drag us down. As you can see, any candle closes below 3507 on the 14-day will definitely mean revert this top side indicator up here to the downside. We're starting to catch a little bit of a trend. Sorry, we're actually starting to break out of the trend, break out of the downwards trend that we're currently in. We've had our blue flashes. Returns are small. Okay, 7-day. 7-day, you close above the JMA. You'll have that flick around and cross through. We're slowly weaning to our mean. That's fine. Contraction positively correlated, which means drag down. Let's go look. Where's our mean here for this time frame? Is 53 cents. Okay. As we know, any observations through. We're coming up. It's our first touch on the 7-day reverse wave trend. So it's going to be quite interesting. 5-day, we need to go look for positive or negative drift. Okay. So 5-day is 18. Oh, is this evening, sorry. Okay, so 5 days going to print through. So the general idea being is this thing is bullish for the next 18 hours and 25 minutes, because what's going to happen here is Pearson correlation is going to mean revert whilst this thing is still in contraction phase, and that means down, right? So if I was to say down for 5 days, 3, 2, 6, 4, 3 day, been pretty good actually, the 3 day over here, mean reverting, a little bit of sideways motion here, close above 3, 4, 5, 5, and you'll easily look to mean revert the 3 day to the upside. We've hit an outlier, blue flash off, returns are still small to the downside. 2 day just for those. 2 days also confused, looking like the 3 day. Here we go, reverse wave trend catching us up on the 24 hour. So here, this is quite a cool observation. General idea being is this candle mean reverts to the downside, so it wants to go target the orange line at 32. Wants to go target the orange line at 3287. If it breaks below these means, that's what you're going to go for. If it holds above here, then you've denied bearish mean reversion to the downside. Our means green. We're going to go hit this orange thing at 3718. 12 hour. And then we'll throw up some targets here. 12 hours looking quite nice. There's going to be a big move to come off the 12 hour, considering we've no more volatility in the book, zeroed out. We need to look for a place to expand. As you can see, that's what expansion looks like. Or this is a contraction phase, that's what expansion will look like. So we're looking for some big candles to come through the books. And a new trend on the 12 hour. Okay, 6 hour. Having its outlier points, you know, considering it's been stuck up here for the weekend, and the 6 hour is pretty much having an outlier event. Well, it hasn't had an outlier event, but it's gone for its second time, and we'll find out soon. Contraction positively correlated. That pushes this thing up. 4 hour, just for those that are interested. Also 4 hour looking like it's wanting to fight off a little bit of, put on a little bit of bull div. It's not going to let you play through until PC flips up. So above 1, then you'll have expansion to the upside. The 3 hour, who's my beautiful little girl, contraction positively correlated. That's what's buying this current wick up that we have. As you can see, pulling into our UMP, 90 minutes, and then I'm gonna put on the 45 minute, then I'll put the VRE levels on. I should put the VRE levels on now. Cool. So what we can see here is 90 minute is having its outlier event. Let me switch VRE levels off so you can see UMP, ultimate power mean. Okay, is having its outlier event. We've broken above our UMP, and the general idea is if you hold above here, you'll naturally mean revert this sucker into 3559. 45 minute VRE's on. So we've come off, we've hit our VRE level, we're targeting our daily means. We've got a few targets to the upside over here, and we've got a few targets to the downside. So the general idea being is any one of these yellow lines that you see here, if I was to make it big screen so I don't cramp you in the corner. So this is going to be your range for today. It's going to be 3, 5, 4, 6, your top side. Your mid range will be 3, 4, 70. Your bottom side for a bullish div for later on is going to be 3, 4, 3, 2. Okay, then we're going to go throw up our reverse wave trend, and we're going to just have a looky see. So 3, 4, the bottom there, that's your big wick into the weekly mean from this region. As you can see here, we have no reverse wave trend data being here, but this is the center point between my higher term time frame. So that's the high term one, that's a high term mean, it's a lower band. This is a general center point between the Q3, Q4 percentile. Okay, 30 minute. So let's see, this isn't actually looking like the most healthiest pump. Just to let you know, out of here. So there you go, you can get capped at your UMP. These targets are coming into play. Let's put this up, and there we go, mean reverting. That did match up in the area of mean reversion. So somewhere in here, if this was to carry on through, some expansion and volatility will be capped by said line. And then yeah, man, I'm just gonna throw out some targets when we're done here. 15-minute looking like it is wanting to mean revert. So here you go. Switch that around. If you want continuation above your daily mean, okay, you're gonna have to close this candle above, well, the next candle above here, and that's automatically gonna trigger serious bullish pressure. And if they can open and close that candle above there, then you know you can go target your mean. And then there's a whole bunch of orange lines over here, which is more than likely going to want to get scalped down by. Alright, then we're going to go put up our PB coins, take everything off again, and see what levels are matching up with what levels. Make it big, zoom out, there we go, make it big, cool, one back. Sorry, we do this every stream. That's cool. Cool. Alright. That was our previous range. This was our monthly mean. As you'll see here, monthly mean. And we'll do reverse wave trend. So, reverse wave trend, come down, hit its mean on Monday open. Come in, hit its mean. Looking to carry on with this mean inversion to the upside. Slower mean is coming into play now in the next 5 minutes. Start opening, closing above that. That's going to turn. If we open and close above this mean, that keeps our 45-minute looking bullish, and anything higher than that. You open and close above that mean, it will keep the 15-minute looking bullish, and anything above that. Or vice versa, you close below it, it keeps it looking bearish. You close below it, it keeps it looking bearish. Have a good day further. Pow, pow.